Hello, everybody. Welcome back to Holiday Homes and Real Estate Investing. Today, I would like to talk about the following subject with you. Why I think holiday homes are the best investments in residential real estate. So there's a lot of discussion going on where to invest, what to buy, and how to make money with real estate in Germany, in Europe overall. And I personally have to come to the conclusion that really the best thing you can do is go into residential real estate and then go into holiday homes. So why is this? This is the question I would like to talk with you about in the next minutes. So let's dive right into it. So let's consider a city like Munich or Kitzbühel, which is a place high in the mountains in Austria, right there. So when you look at the prices in 2007, so this is just Munich, in 2007, you would have paid for a 100 square meter apartment, roughly, I would say, roughly, about 500,000 euros. Now, we're in 2019, and I do see offers in the market for the same 100 square meter apartment of about, say, 1 million euros. So please bear in mind it's very, 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 very rough estimate. So 1 million in about 12 years, prices doubled. So at the same time, when you look at the monthly payments you can get out of these apartments, and you can say that in 2007, for 100 square meter apartment, you charged about, say, if you're really good, about 1,800 euros. And today, in 2019, you would be at, say, 2,100 euros. So very rough. So at the same time, it's just like 300 divided by 1,800. It's just an increase of, say, 17%, as opposed to like 100% here and 70% here, meaning that when you do the numbers, that the yield you're getting out of a really nice place is going down. Why? When you say in 2007 you made like 1,800 euros per month with an invest of 500,000, which is, if you do very, very roughly and calculate it up to the total year, so it's 12 months times 1,800. 12 months times 1,800, and you divide it by 500,000, then you are at about 5.3% yield per annum. So very rough calculation. And today you are at 2,100 divided by 1 million, which is 2,100 times 12 divided by 1 million equals to 2.5%, which is a bummer. I mean, it's nice because you had a really nice appreciation of your property. So 500,000 to 1 million, which is 500,000 gain in 12 years, which is not that bad, which is really cool. But from an investment perspective, this is really bad. And the stupid thing is you cannot do anything about it. Now let's take a different angle on it. So imagine we are sitting in Munich, and by the way, this goes for every top location. So this goes for, as I mentioned, for Kitzbühel. This goes for, say, what else we have? This goes for Opatya. This goes for Lago di Garda in Italy. Lago Garda. So the method isn't the same. So number one, problem: permanent tenants have lower incentive to pay high rents. So saying in Munich, say 2,000 to 2,500 per month is kind of already, it's not expensive, but it's the higher end. At the same time, when you look at vacation travelers, they have a high propensity or a higher willingness to pay. Why is that? Because they're on vacation. They are on vacation. They want to enjoy themselves. So now assume this vacation traveler would spend 7 days in Munich. And this traveler is 4 people, 2 adults, and 2 kids. So now assume they would go to a hotel. So when they go to a hotel, say they would on average probably have to book 2 rooms, and 1 room is say 100 to 120 euros, depending on the season where they go. So times 2 is about 200 to 250, I'd say, euros. So in total, they are willing for 7 days times, let's do the low one, 200 euros is equal to 1,400 euros per week. Now assume you would be really central in the city. You would get 3 out of 4 weeks. You would get your apartment booked, which means you can make 3 times 1,400 euros per month, which is 4,200 euros. And now what? You see here you have 4,200, and here we add 2,000 to 2,500. So if you did the same calculation, if you can say now, when you look at this number, we had a yield of 2.5% versus we say we have 4,200 per month. Now assume we would get this for 10 out of 10 months out of 12. This would get to a total of 42,000 euros divided by 1 million in value would be a yield of 4.2%. 2%, 2.5, and 4.2. See the difference? So now we have a little bit, the example is a little bit problematic because, first of all, Munich is a regulated city in terms of vacation rentals. So it's not, you can do it, but it's complicated. It's not easy. But that's not the point. I just wanted to show you the example of of the mechanism behind it, why I think vacation rentals are much better than permanent residential properties in terms of generating yield from your property. So when you go into when you take the following argument, say, okay, assumption one, you want to generate yield. Assumption number two, you want to go into great locations. And third, you want to have fun with your investments. To have fun. So if you want to make some money, if you want to invest into great locations, and if you then want to have fun, then the only conclusion you might have is you have to go into holiday homes or vacation rentals. Why? Because the average price per square meter you can charge for a vacation rental is much higher than the average price you can charge per square meter for a permanent place. So that's about it. That's the whole magic of why I do think that vacation rentals are a better investment strategy for you when you want to go for high yield in great locations, and where you want to have some fun. So of course there are always limitations to that. So limitations of that model, just to be clear. First of all, if the price you have to buy is too high, then it could be possible that the yield is really, really low. Second, what constitutes a great investment really, really depends on your investment strategy. So how much money do you want to make? So there are people that say, okay, I have so much money lying around that if I can make 2%, that's much more than I get on the bank, because on the bank I have to pay for putting the money there. So everything that is on great 10%, at 2%, that's perfect. Then there are people that say, no, I have to have at least 10% or more if I go into vacation rentals, because that's kind of a risky thing, and I really only want to do it if the upside is really good. So now this is really important to understand that there's no such thing as a good or a bad investment. It also depends on your preferences. And then also third, what is your risk profile? So how much risk are you willing to take? So this could be, are you going into renovation or not? Are you just looking for newly built properties? Are you maybe interested in remote locations that are remote locations that are up and coming? So these are all factors that contribute to your risk profile, and depending on the risk profile, the decision is another one to invest in a property or not. So long story short, I do think have a look at holiday homes. That's my core message for you, and I thank you very much for listening. And as you might know, if you have any questions or want to ask anything, or would like to run any analysis together with me on any sort of property you might have, then just check out my email address and send me a message on stylondo.com. So thanks a lot for listening. Talk to you later.